And now back to your hosts, Don Getling and Gino Franti.
All right, we got back to the bottom of the first hour of the Don and Gino Real Estate and Finance Show on your hometown station, AM 1220 KHTS. That's right, the Don and Gino Show. Now, for over 3.5 years, guiding you to personal financial wellness. What a treat it has been, helping a lot of you and changing your lives, and you've changed ours by being part of our lives now, and we appreciate that, and all of us here at Cherry Creek Mortgage appreciate it. I know, Gino, you appreciate it.
I do, and in fact, the best way to appreciate us, so we know that you're out there, is to reach out to us at donandgino.com. That's our hub. That's the best place to reach out to us. Or just shoot us an email at donandgino@donandgino.com actually works, or donandgino@gmail.com.
Or like our Facebook page. Then we know you actually listen to us.
But they would have to like us, too.
Yeah, like us. We won't spam you, we promise. It'll be fun. It's fun information, like the information that is being shared with us today from Elliot Eisenberg, PhD, and a nationally acclaimed economist that makes economy fun and informative and understandable. And Elliot, thank you for coming on our show again, buddy, and extending your half hour to another few minutes here.
My pleasure. Absolutely, Don. Absolutely, Gino. You guys are fun. I love your website too. I'm enjoying it right now as I'm chatting with you.
Hey, actually, on that note, yours is a hoot. You got all kinds of great information, and you always got great articles you write on a monthly basis. For somebody that's written over 85 articles, been featured in Bloomberg, Businessweek, Forbes, Fortune, you should get to know Elliot. So go to his website at econ70.com. Is that easy? ECON70.com. Is that right, Elliot?
You got it. Econ70.com, right?
All right.
Absolutely.
You'll see our good friend and awesome guest, Mr. Elliot Eisenberg, and our chosen economist to help guide you to personal and financial wellness. So we were teasing up a little bit about the housing market, and Gino's got some numbers he wants to share with you to kind of, start that conversation, if that's okay.
Sounds great.
Yeah, so Elliot, here's the thing. So last year, starting in October, Don and I started warning people that the year-over-year Case-Shiller index numbers were going to start to decline. We couldn't continue to see numbers in the double digits for national numbers, high double digits, 22% in California. Those numbers could not continue because they were year-over-year numbers. As the base of our market continued to improve from the doldrums, the year-over-year numbers would start falling off, and we predicted back then that we would be in the 6 to 8% range for this year. The last one that came out was the April report, and that one's showing 8.8% nationwide, still much better than that in California, but I've been saying that June gloom is coming on this report. When we see the June numbers, it's going to come down significantly. And I wanted to clarify that that doesn't mean there's a housing bubble. That just means that because it's year over year, it's reflective of how many gains we had last year and how great June was last year, not how bad it is today.
I couldn't agree with you more. I'm not convinced it'll be June gloom. We can argue about that, but absolutely. You look everywhere. And the part of the reason California had such a tremendous uptick in prices, those huge 20% increases, was because you came down so hard. Places like San Bernardino, Riverside, and so on, and all these non-coastal cities took tremendous hits, let alone San Francisco and so on, and San Jose too. But you've turned the corner, and there's no way we can sustain these increases. And the reason is, at the peak pricing, house prices were already very, very expensive. And since then, incomes have not come up on average. Sure, in Beverly Hills, they're doing well, and in Brentwood, and I'm sure in Santa Clarita, too, and in the whole valley. But, other parts of California, you haven't experienced that. So at some level, and you're not going to get it for a couple of reasons. The first reason is incomes. The second reason is inventories. Inventories are going to start to rise now, as people who were underwater now can get out of being underwater and sell their house and make money, or just sell and get out. They can now say, okay, I'm leaving. And as they put their house on the market and inventory increases, suddenly that pressure on house prices goes down. House price increases would slow down even further if builders could build more units in places where there's big demand, San Francisco and Los Angeles and so on. But it's hard for builders to build in California because getting permits is very hard, land is very expensive, the permitting process takes years and so on. But those huge price increases are a thing of the past. Don't tell your clients, buy a house today and get 20% more when you sell it next year. That's just not right.
We couldn't agree with you more. Great advice from Elliot Eisenberg, PhD, and our acclaimed economist that comes on our show occasionally. And we really appreciate you coming on our show again today, Elliot.
So happy to do it. You guys are fun. I love your audience. I love what you guys do. I'm a firm believer.
Well, we'll have to have you on a regular basis if that's okay, sir, because you make it fun. We enjoy speaking with you, and you always have. We've learned being on the radio, and you can probably appreciate this as you know, somebody that speaks all over the nation. It's important to actually have an opinion and share that opinion as opposed to just giving fluff. Am I right?
Yeah, and economists are good at that. It's, well, on the one hand, on the other, I don't know. And economists are always hedging themselves. And, you know, you can hear a couple economists, and your listeners are smart, and they can make up their own minds, but they deserve to hear what people think, unvarnished. What do you think? And then they can decide how to structure their portfolios or make purchase decisions or not make purchase decisions, as the case may be.
Okay, and go ahead, Gino.
Yeah, well, you know, I actually wanted to tie back into something we said earlier in the show is, you know, all the conversations we're having about slow growth and, you know, even slow growth in housing without blockbuster years, all of this points to a really healthy economy over the next 5 to 7 years is the way I see it, because we're not going to have the boom and bust as we discussed. And the other thing that's really important is we're going to have some predictable growth instead of this unpredictable growth, but hopefully it gives us confidence. I think that without confidence we don't have anything, and that's what we've seen is that we're slowly building confidence in our marketplace. I don't see people that are concerned about losing their job. I don't see people that are concerned about making moves. Everybody seems fairly confident with where we're going.
At least as many people, yes. You agree on that?
Yeah, I think you're right. I mean, there's still people who don't have jobs and so on, but those of us who have jobs are not terribly worried. The number of people losing jobs, getting fired is very, very low. We've sort of gone in this, we're in a low boil now, a very low simmer, pleasant situation, decent. I'm not sure if we get 7 years. That would be a long time, because don't forget, this recession ended in middle of '09. So we've now already entered 09, 10, 11, 12, 13, 14. We're at 6 years into a recovery at this point. Yeah, at 6 and 7 is 13. That becomes the longest recovery in history. So, you know, you get to 9, 10, 11 years, okay, something's going to go wrong at some point.
Yeah, I guess
maybe,
my point is...
Maybe not, but maybe.
I guess my point is, since it's been such a lackluster recovery, that it would be a longer recovery rather than 7 years.
Oh, absolutely. Absolutely.
Okay, so
you're right on. You're right on there.
Then thank you for that, Elliot. Again, Elliot Eisenberg, and you can check out more from Elliot. Great guy, very informed, and somebody you should get to know by going to econ70.com, econ70.com. All right, last question. We talked about where the economy's at and jobs and all that good stuff and the appreciation levels. Do you think it's a good time still to buy right now?
I do think it's a pretty good time. House prices are not going to come down. There's no plausible explanation that would let me think that's the case. I think they'll come up as banks become more willing to lend to lower FICO score people on one hand, and B, interest rates are good right now. You're not going to get a chance to get an interest rate this low again in the near future, in the foreseeable future, hopefully the rest of your life. So rates are low. House prices aren't going to come down. Yeah, if the time is right for you to move into a house, and the time is now, don't wait. You're not going to be better off waiting. House prices aren't going to get cheaper, and rates aren't going to get lower.
All right. Boy, that sounded like an echo from our studio every single week, so thanks for helping clarify that. Any final thoughts from Elliot?
Hey, I think we've gone through the worst by far. The economy is getting better. In the first quarter, negative GDP growth of negative 2.9 was, I wouldn't say aberrant, but it was sort of just a one-off thing. There's no sign of a recession out there. Things may not be spectacular, but the labor numbers are good. Focus on that. That's a better indicator of how the economy is doing than this one-off bad weather, crazy thing Q1 that we had.
All right. Thank you again. Again, Elliot.
About 1 minute.
Elliot Eisenberg. Go check him out at econ70.com. Elliot, thank you so much for being part of our show, and we look forward to having you back on soon, buddy.
You bet. Thanks, Don. Thanks, Gino. It's been a pleasure.
And keep passing on that great information that we all need to know, the real information from Elliot Eisenberg. Again, Econ 70. Thank you for joining us here on the Don and Gino Real Estate and Finance Show. We're going to be right back with a real estate hour, and we got Mr. John Carlson and a couple of his buddies. You're going to have to be shocked at who they are when we come back to the Don and Gino Show.